You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is time to rock out in the world of futures options. And man, do we have some rocking in store for us this week in one complex in particular. You can probably guess what it is, listeners. We've been talking about it a little bit of late. I'll let you ruminate on that a little bit. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging and mainlining out there these days. Yet another reminder at the top of the show, make sure you subscribe to the full network wherever you get your favorite podcasts, because otherwise you're missing out on shows like the Futures Rundown, very much the sister program to this one, as well as the Option Block and Vol Views and everything else we do over there on the network, and including heading on over to the Pro, theoptionsinsider.com/pro. If you head on over there, you'll be getting the show in your ear holes right now, or pretty much right after we record it on the old live stream recordings, only accessible to our Pro members. You don't have to wait for the podcast to hit the network out there listening. You also get the raw, unfiltered edition, so you can hear what some of our compatriots really have to say about things before we filter and edit them. Get the raw, uncut versions, as well as, of course, early access exclusives, all kinds of cool stuff. I mean, on this program in particular, we've been giving you some cool access to a lot of content and analytics you folks should be familiar with listening to this show. But maybe for the equity options market, all of our Pro members getting early access to that alpha there, all kinds of good stuff. Theoptionsinsider.com/pro is the place to go as we keep on going into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers Report, the portion of the show where we break down everything that's lighting it up to the light side and to the dark side over there at CME Group this week. And, you know, we are in those kind of weird markets. We're drifting up, we're drifting down, we're kind of drifting all over the place. Sometimes drifting aggressively intraday like we're doing right now. A little bit of whipsaw action out there. So all of that leading around to having a pretty mixed bag on our 1 week chart this week over there at CME. We're pretty close to 50-50 green over red. The markets can't really make up their minds if they're winning or losing this week. And also percentage movers were also pretty close to in line out there this week. So it's kind of a very even keel week. Again, kind of showing just what a mixed bag this market is right now and how much back and forth there is on both sides of the market out there. So yeah, the closest we've seen to a symmetrical market on this show in quite some time. So interesting stuff out there. You can see this report for yourselves if you follow us over there on Twitter. It's yet another of the premium reports that we kick out to you folks as we keep on rolling. Since it's me on the show, I get to choose where we kick things off this week. And you know what, listeners? Let's go dark side because it seems on brand for me. Number 5 to the dark side. We're going out to Brent. We were just talking with the folks from EdgeClear on the show not too long ago about what potentially could happen if WTI broke that 60 handle. We did get there, got to 58 out there. It's been a bit of a dark side week out here in the energy, and that's reflected number 5 with Brent off 6.16%. Number 4, our old pal WTI off 6.33%. Number 3, nat gas taking a bit of a drubbing this week off about 9.5%. It was number 1 in the same direction last week off 5.2%. So rough couple of weeks for the Widowmaker. Number 2, as the Flowmaster was just alluding to, Bitcoin taking a bit of a starching this week off 10, almost 10.5%. And then the number 1 dark side mover, lean hogs, off nearly 15%. Anyone who's gone to the grocery store recently and seen any sort of pricing for meat products out there, you could certainly be a little bit happy that we're seeing a little bit of dark side in lean hogs. Now we need it in feeder cattle and everything else to maybe get some of that butcher case to line back up to reality as we keep on rolling to number 5. Not seeing it this week, listeners. Number 5 is our old pal, live cattle, up nearly 4% again this week. So once again, if you're looking to buy steak or anything like that, maybe you consider pork instead. Number 4, it's platinum, up a little over 6% on the week. Number 2 in the same direction last week, up 7.5% again. In fact, the rest of our light side top 5, you could probably guess what it is. It's all in that same category. It's the shiny stuff. Platinum, number 4. Number 3, our old pal gold, up nearly 8.5%. Just since our last show. There are years, listeners, where gold can't manage that in a year. And we're doing that in a week. That's how wild this precious metals market is right now. 8.5% for gold, and it's only number 3. What could top it? Well, of course, more metals. Number 2, palladium, up nearly 9% since our last show. And it was number 1 the week before that, up 18.16%. So the 2P metals have certainly had a good couple of weeks. And the big dog, I was charitable. I offered him a moment to come on and speak in defense of his beloved silver, Uncle Mike. Alas, he could not make it, so I get to talk smack about number 1, which is silver, up 13.23%. Just absolutely wild stuff. Hi-ho silver doesn't even begin to describe it, listeners. So I think you know where we have to start and indeed focus this week. But before we get there, we got to dive into a little bit of vol moving and shaking. What do you say, listeners? CVol and CME, type those into your browser. That will get you to the CVol dashboard. Once you're there, click on the aggregates tab and set your high-low range to 1 week if you want to line up with the show. Once you do that, you'll see that metals topping our list yet again. Metals just topping every list you can think of right now. Also pinning the needle to the upside for vol, which again is wild. Metals not known to be hot spots for vol, and yet you're setting new all-time highs almost literally every day. How could they not be pinning the needle to the upside? Metals CVol, as we kicked off the show, 28.73. That is the high for the week. It's over 4 points above the low that set earlier this week of 24.16. So metals just roaring back to life from a vol perspective and a price perspective, showing, again, gaining about 1 1/3 points just today. I mean, you go back historically, gold, not really a very volatile asset. Silver, a little bit more volatile, but it takes a lot to really see this kind of vol, this kind of juice in the metals complex. And we are seeing it right now. Vol increasing pretty much every day but Monday out here this week, listeners. So just a wild stuff out here on the metals front. Below it, we have the aggregate commodities CVol 36.38, up 0.16 today. And that is the high for the week, the low 33.79. So you do have a bit of a mixed bag on the vol front as well. Metals, commodities, a couple others kind of pinning the needle to the upside this week. The rest kind of mixed to slightly down. Ag products also kind of close to their high for the week. 17.17 right now, giving back about 0.06 out there today. And the range for the week, 16.81 to the downside, 17.38 to the upside this week. So coming off that high a little bit, but still closer to the high end of their weekly range. They've been losing vol pretty much every day this week with the exception of Tuesday. So interesting stuff out there. As we keep on rolling out to the treasuries getting shellacked from a vol perspective today. Right around 4.5 right now for the treasury price vol. Giving up 1/4 of a point just today. Doesn't sound like a lot, and in most assets it would not be, but in treasuries where you're starting at a baseline of around 4.5, it's a big move. That is not even the low for the week. The low was 4.35. They've kind of rebounded off that. The high 4.92, so nearly 0.6 of a point in range this week. It's actually pretty decent for the treasuries out there, hanging out kind of towards the lower middle portion of that range right now. Then below it, we have FX right around 7.5, off 0.11 today. That is the low for the week, the high 7.91, so a little over 0.4 of a point range. For FX vol, that's also pretty wide for them. Again, not known to be a very volatile complex usually. Below it, we have the energy CVol, 52.25 today, off about 2/3 of a point. That is close to the high, but not the actual high for the week. The high was nearly 53, 52.98 that it hit yesterday. The low 49.13, so still very much close to its upper band for the vol range for the week. But interesting stuff in energy. And then wrapping it up with our old pal Treasury yield vol coming back to earth a little bit as well. 89.33 right now, off a little over 5 points today. The range for the week, 85.29 to the downside, 97.1 to the upside. So a pretty wide range, hanging out towards the lower middle portion of that range as well. So kind of a wild week in CVol. Metals kind of bringing the heat. A few others out there. I think you know, though, where we need to start our journey this week and pretty much focus our journey this week. It's the elephant in the futures and futures options world right now. It's the metals. So let's get there.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the metals we go. Remember, if you go to cmegroup.com/TWIFO, you can follow along with the show. You'll have to log in or create a CME account. Takes literally 30 seconds, and it is free. And it gets you access to all this data you can't get anywhere else. So it's worth the price. It's free. And I'm hard-pressed to think of another analytics suite that is this good, this full-featured, that is available for free out there. It's the best deal in town. Let's just put it that way. As we keep on rolling out to the land of the metals out there, listeners. Again, cmegroup.com/TWIFO is the place to go to begin your journey to the dark side. Once you're there, you're going to go pretty much down to the bottom of the list, which is metals out there. And we're going to kick it off. We're going to go into precious in the product family. We got to start with the big dog, which is gold. Where we go from there is probably silver next. And then beyond that, we shall see. See a lot of folks in our chat talking about the metals. Again, it's hard not to. It's inescapable these days. Unlimited saying, looking at the silver prices, I might need to brush up on my coin clipping skills. I think we all are looking in the attic and in the safety deposit box. Say, hey, I got any of old great grandpa's jewelry hanging around in here? Good time to maybe cash some of that in. Age saying he remembers 2011 and Silver Mania, not old enough to remember the Hunt brothers. I don't think most of us are old enough to remember the Hunt brothers out there, listeners. But interesting stuff out there. And again, pretty much the last time we saw this level of mania, certainly in silver, but also in all of the precious metals markets out there. It's really absolutely wild stuff out here these days. Good time to have to be talking about buying class rings right now and all that kind of fun, listeners. And guess what? Precious metals, not cheap these days. But let's get out to the land of gold. Listeners, it is the big dog out there. And again, new all-time highs. As we're coming in to start the show, 4,300. I mean, these levels, 4,308 was where it was when we kicked off the show. I mean, these levels, absolutely easy for me to say, absolutely astronomical out here, listeners. Again, we were just talking, 3,800 not too long ago and saying, well, 4,000s, those were lighting it up in December. We seen, we were rallying pretty good. It seemed like 4,000 by the end of the year was doable. Forget that. 4,000 a few weeks ago, already north of that. 4,200, new all-time high not too long ago. Now, forget that. 4,300. It's absolutely wild out here, listeners. Again, this is the kind of stuff that is usually reserved for the sky is falling type markets, and instead we're getting it in somewhat celebratory markets on the broad equity side, at least. I mean, maybe not a great time in crypto, but the equities for the most part have been drifting north out there. New all-time highs in gold and in the equities. That always tends to ring alarm bells in the back of my mind, sets off my spidey sense out there, and probably for a lot of you as well. And again, gold just bringing the heat this week from a volume perspective. If we were just talking about names that are exceeding their ADV, we have to start with gold. Gold, average week around 250,000 contracts. Maybe if things get spicy, 300, 350. Things are absolutely wild. 400, 450. I can probably count on one hand in recent memory the number of times we've threatened even 500,000 contracts in gold options. It's very few and far between. Today, already 639,000 contracts this week in gold. So absolute banger. 2, 3, maybe even 4 weeks if they're quiet weeks worth of volume going up this week. So clearly everyone and their mother and their cousin's brother's frat brother are trading gold out there this week, listeners. So we got to get into it right now. Again, 639,000 contracts. Of that, DEES is usually the hot spot in the metals, and that's the case right now. 39 days to go with about 31% of the flow. So we're going to hang our hat out there. The future, again, 4308 as we kicked off the show. And what is the volume, you might be asking, in DEES gold? It's 2718, which is fairly rich. We see gold hanging out mid to high teens very often from a vol perspective. So threatening a 30 handle in gold vol, kind of wild. But then again, look what we're doing out there. It's kind of hard to argue that it's too high. Up 7.25 points just this week. Again, absolutely wild. Also shows you we're blowing through strikes to the upside, and those strikes are clearly still bid. So vol is increasing as we rally, which we don't often see. People get confused by that. They don't see that in the equities, and that's what they're used to. But in the metals, very different rules of engagement. Worth noting, we are through that 4,200 strike right now. Those were pretty active out there, expiring in about a day. So there is some zero DTE flow going out here in gold. Those 4,200s have been active all week. About 2,000 going up. 440 today, 400 yesterday, 400 the day before, and about 800 on Monday. So closing Monday and Tuesday, opening Wednesday and today. Hopefully those are opening buys because 4,200 looking distant in the rearview mirror right now. But the hot option out there this week in the big dog of the shiny stuff, the king of the metals. It's a tight fight between the Nove 3,900 puts going up a little over 10,000 times, but it's the par puts, the DEES par puts, taking it with almost 12,000 contracts this week. Kind of interesting. Are we seeing some bearish exhaustion here? Are folks finally saying, you know what? This thing's got to turn around at some point, and I want some par puts. We were just saying the par strike was maybe a bit of a bridge too far by December expiration to the upside. Now it is 300 handles to the downside. Again, just shows you how wild this move has been in gold out here, listeners. Absolutely wild stuff out here. If you're wondering what is a DEES par put going for right now, it's about $40. They are not giving these away. $40.10 is what they were trading for this morning. And these things traded nearly 12,000 times this week. So $40 for the 4,000 puts by December. You like those, listeners, or are you saying sold to you? Let's take a look at the skew. Maybe that will give us some hints of what's going on out here. The puts were 2% cheap last week in December. This week, about 2% cheap. So no real huge evolution there on the skew front. Calls, 4.4% bid last week, 3.4% bid. Now, you might say that sounds kind of light for the upside bid for gold. And you're right, it is. But also, we'll be blown through so many strikes. At a certain point, that bid has to kind of dwindle. And that's kind of what we're seeing right now. The Jan bid is a little bit stronger. Jan calls are 5.1% bid. They were 7% bid last week. If we go out to April and May of next year, the calls are about 7.5% bid. So still some strong upside. Interestingly enough, if we go all the way out to Dece of next year, which is usually where we see, the farther we go out, that bid usually intensifies. The Dece 2026 calls are only 2.8% bid. They've come down from 7.8% bid. So longer term Dece calls, not feeling the juice, not feeling the love right now. That is certainly surprising, especially when you see that the Nove calls are 24.4% bid. So there's some interesting disconnect there. It might be worth exploring a little bit. Maybe there's some calendar opportunities to the upside in Nove and Dece of next year. Certainly sounds like if you bought that 1 month calendar, you could maybe do all right. That said, it's a long time to go to sit on a calendar in gold, but weird stuff afoot out there in the November contract, certainly, and in December. But we'll go back to December of this year, listeners. I'm getting ahead of myself. Par puts, 4,000 puts, trading 12,000 times this week. The big day, actually today, about half of that volume, over 6,000 contracts going up just today. So that is clearly the hot trade of the day and the week. Again, $40 for those puts. They are not giving those away. These puts also have about 39 days to go. So they are effectively $1 a day that these bad boys can decay on you. Just think of it that way, listeners, if you're trying to come to grips with what that price means at the end of the day. Is that worth it? Can we just fall out of bed in gold? At this rate, the sky is the limit on this asset, but absolutely wild stuff. Par puts, I did not have that on my bingo card this week, which is, again, why we do the show out here this week. They traded 2,500 yesterday, 2,000 on Monday, 1,100 on Tuesday, opening pretty much every day this week, including today. Today's 6,000 contracts exceeds the OI of 4,600. So clearly more opening flow going up out here in these Dece par puts, which again is kind of wild. Let's just look really quickly. Par puts going up. Also worth noting, there is a Dece par 3,800 put spread going up today. So that's obviously accounting for about half of those puts. 3,000 of this put spread have traded today. What would you pay, listeners, for the 4,000 3,800 put spread? Maybe you're saying those par puts a little bit too juicy. You might want to sell something against it. How about this put spread for about $24.30? So you're taking pretty much $16 off the top with those 3,800 puts. So maybe that makes it a little bit more palatable. I guess if you're going to go that way, I might like the put spread a little bit better, because $40 for those puts, as much as that your lizard brain might want to tell you, hey, this gold train has to reverse at some point. Right now, the trend is not your friend, listeners. Do you want to throw $40 away on that happening by the next month? In fact, think of it, listeners, just $1 a day in decay on those puts, pretty much. Not how decay works, obviously, but it's a good way to think about it, listeners. So, or maybe you like a little bit meatier put. You want to get closer to the fire. Dece 4,100 puts trading a boatload today, $65.70 for those bad boys. So we got some wild activity afoot out here when it comes to gold, listeners. Let's look really quickly as well. If you want some upside, if that's your game, the 4,500s in December, also pretty active, trading over 9,000 times this week. Pretty much 2,000 to 3,000 contracts a day, every day, opening every day. Today, about 1,800 against an OI of 4,800. So maybe folks are getting exhausted out here. You like that strike, listeners? 4,500s by December expiration. That seems like, is anything a bridge too far at this point? By the way, if you're wondering, these 4,500s, $60.40 is what they're trading for today. So If you like that Dees Par 4500 strangle, it's going to cost you a cool $100. Maybe you're saying that's too far. Sold to you on both of those. In which case, you're going to sweat for the next month. But you might pocket $100 as well. So yeah, wild stuff out here in the metals this week. I also mentioned there were some puts lighting it up a little bit closer to home. These were the Nove 3900 puts trading 10,159 times this week. Again, these only have 12 days to go. So 3,900, that would be a wild move. And it seems like someone else thought the same because the lion's share of that 10,000 traded on Monday, about 6,300. Looks like somebody was bailing on those on Monday. So they decided to get what they could for these 39 puts. It seems like if past is prologue, that's usually how these puts play out in the metals. And get the heck out of Dodge. 1,500 on Tuesday, 1,400 on Wednesday, 1,000 today against an OI of 3,700. So they were trying to figure out if it was worth getting any other cash. I'm looking to see if I can find those puts. No prices for those puts on here right now. They traded again mostly on Monday. We'll have to go back to Monday to find those. But intriguing stuff out here in gold, listeners. Have you folks been slinging it? What are you up to if that's the case? Are you loading up on upside? Are you selling upside? I know a lot of you play GLD as opposed to the big gold options. You know, the analysis plays there as well. You're not going to see call wings bid in the big gold options and not see commensurate bids in GLD. So even if you're listening to this and you're saying, man, I don't trade those, I trade GLD or SLV, guess what? Applies there as well. There is an arb between these at the end of the day. So something to bear in mind. Let's look for see any other weird or wild prints. 42 halves in April of next year, trading nearly 6,000 times this week. That's an interesting strike as well. They've traded 6,000 times almost this week. The big days yesterday and today, 2,800 yesterday, 2,100 today. Looks like they are closing, so maybe somebody deciding to get the hell out of Dodge on these. And you know what? When you see these prices, you might agree with them. An April 42 half call, listeners, trading today, nearly 1,000 going up today for $278.50. So if you were long those and you're sitting on that much premium right now, it might be kind of tempting to unload some of it as well out there. 42 halves trading for that level. That strike seemed absurd just a few weeks to a month ago, listeners. So sometimes discretion is the better part of valor out there. Looks like there was some opening paper on Wednesday when they were closing a bunch of these 42 halves on the 4,400s also in April. So there is potential that they sold these calls and then reloaded on the 4,400s. In which case, are they throwing bad money after good, or do you like that trade? Do you like to roll to keep the party going? Wild stuff out here in gold. Dare I say it, listeners, we could probably do the rest of the show on gold. There is that much paper out here, listeners. If you're selling puts, listeners, where are you drawing your line in the sand in gold right now, or is that just too scary for you? I know we were talking earlier about Dees par puts for about $40. Is that your huckleberry out there in GLD, perhaps? I'm curious. Hit us up. Let us know. A lot of our chat still talking about the Hunt family. Yeah, the Hunt family. That was you don't see major markets try to get cornered very often, so it certainly is a celebrated part of market lore. You know what else is celebrated as we flip on over to Uncle Mike's favorite product, which is silver. Silver. 52.78 as we kicked off the show. We were just talking about the 40 handle and saying, that seems pretty wild, pretty optimistic. 45, I don't know. That seems maybe a bridge too far. Forget all of that. 52.75, up another $5.50 or nearly 12% just since Monday, listeners. Again, this is the product going back to the history of the option block. Sleepy doesn't even begin to describe it. Uncle Mike sat on it for years in his portfolio and kind of just watched it slowly do its thing. And now it is making up for a decade of lost time in the span of a few days. Absolutely wild. Also making up for it on the volume front. Typical day, we might see silver do 30, maybe 35,000 contracts if it's a decent week. Some weeks less than that, 15, 20, 25,000. Hot week, maybe 50, maybe 60,000 if you're talking crazy town. I can't recall the last time we saw 100,000 contracts going up in silver, let alone 120,000. And that is where we are this week. So again, we're in some rarefied air right now on the precious metals front. Once again, it's Dees leading the dance. That's kind of the way the metals trade, listeners. You should know that by now. The Dees future, again, 52 3/4, 36.3% of the flow going up in the December contract. We will hang out there. What is the vol in Dees gold, or excuse me, Dees silver? About 48 1/4, up nearly 11 points, 10.8 points this week. Again, shows you why that C-vol is just exploding. Also shows you, even when gold is pretty spicy, silver still has that vol premium over gold, which makes it more attractive to some folks on the premium harvesting side, obviously. Skew-wise, what do we got cooking in silver this week? Let's see. The puts last week, 2.6% cheap. Getting cheaper this week, nearly 6% cheap. So folks apparently not reticent to blast away on some downside. To the upside, calls getting more bid. So the skew seems to be intensifying, listeners out here, which again, maybe shows the market is not done with this silver run. The call 6.1% bid last week, 8.4% bid this week. My goodness, they cannot get enough of this silver. And what is leading the dance out here this week? If you said 50s, maybe 52 halves. Nope. The doubles, the Dees doubles, the Dees 55 calls changing hands 4,162 times, listeners. Absolutely wild stuff. Let's see. The big day for these was actually Monday. About 1,600 going up on Monday. Mostly opening. 1,100 on Tuesday, slightly closing. About 700 each yesterday and today against an OI of 2,360. If you're wondering, what is a Dees double going for? $2.25 today. So again, we have a little bit less than 40 days, 225 to the upside. You like that, listeners? Are you saying sold to you? You want to collect that upside premium? If the skew is any indication, and it usually is, then folks are paying that. Folks are buying those calls right now. Right behind it, we have the 53 calls, so slightly closer to the fire calls, going up about 3,200 times. The big day also Monday. So it looks like you might have had a bit of a call roll on Monday. About 1,800 of the 53 calls being closed on Monday and then reopening on the double. So once again, it seems like we saw that in gold. It was not a close, but really a bit of a roll. Seems like we're seeing that here in silver as well. So folks are not giving up the ghost. They are rolling, which is kind of fascinating out here, listeners. And then 53 calls doing about 500 contracts each the rest of the week. The OI right now only 589. So looks like folks are mostly closed on these Dees 53s because they rolled them to the doubles. They're keeping the party alive, listeners. Worth noting the doubles also trading in January about 2,200 times. So the double strike is clearly where the action is in silver. If you like the Jan doubles instead, a little bit more time to run on those bad boys. The Jan doubles give you about 68 days till expiration. So you're getting roughly twice the duration. And those cost about $2.91. So Dees doubles 2 1/4, Jan doubles $2.91. So you might like that a little bit more out there, listeners, if you're going duration wise. Again, that future a little bit different in Jan. It's at a 53.42, so it's roughly 70 cents higher than the future for the Dees contract. But interesting stuff out here on the doubles. And if that's not enough for you, how about the 60? 60 is going up about 1,100 times. These are in February of next year. So Feb 60 is going up again 1,180 times. I have Nove 60s. Those are 29 cents here. I don't think we have the Jan. I think they traded earlier this week, listeners. But wild stuff out here. They traded mostly on Monday, 600 on Monday. It's like Monday was the big day for closing or opening new positions here in silver. Again, 1,180. So about 600 on Monday, mostly opening. 400 on Wednesday, and the rest kind of scattered here throughout the rest of the week. So 60s going all the way out to February of next year. I mean, is anything crazy at this point? Could be at 60 tomorrow in this insane product. Absolutely wild stuff. Let's keep digging really quick to see if we see any other fun things. I said the doubles are where the action is. That is also the case in November. I just mentioned these earlier. If you want a cheaper bite at the upside, Apple, again, only about 12 days to go. But the Nove doubles, those are going up. We just talked about it earlier. I think it was about $1.12. So interesting. They're actually not as cheap as I thought. So even if you go out to Nove doubles, they are pricing it in on this upside, listeners. That those calls in November getting juicier this week. They went from 3.5% bid to nearly 6% bid. So again, we are exploding to the upside. And unlike maybe in gold, where maybe the skew is starting to show some signs of equilibrium being reached, doesn't seem like we're seeing that in silver. We're seeing pronounced bid to the calls and pronounced discount to the puts pretty much everywhere you look out here right now. And certainly the trading reflecting that. Those Nove doubles, just 12 days to go. Trading right now for some pretty lofty prices out here. Again, $1.12, $1.13 for those. So you like that, listeners? Or are you saying sold to you? I don't mind getting out at the double level over the next 12 days, and I'll take $1.12 for my troubles out here. I mean, at what point do people start saying sold to you on these calls? Clearly, it is not right now, listeners. So, wow, absolutely wild stuff out here in gold and in silver this week. Since we're talking metals, let's keep the party going. Let's go out to some of the P names. Let's just hit all the precious because that's where the action is right now. And you know what? Historically, platinum hasn't really been a name we could sink our teeth into from an options perspective, but that is starting to change. I have mentioned it a few times here on the show now that platinum's starting to put up some numbers. Again, it's not gold. It's not even silver. It's not even Bitcoin. It's only about 6,000 contracts, but compared to what it used to be, it's actually impressive. Platinum right now, 1733 in that front future, up nearly 7% or about 110 handles just since Monday. So platinum just on the rampage. It's the 18 halves going out in December and the 1800s, a lower strike, interestingly enough, in January that are leading the dance in platinum this week. Again, about 6,000 contracts almost exactly on the tape. The big dog are the pars in January, the 1,800 calls going up 610 times. Looks like folks are getting the hell out of Dodge on those. They are closing on most of these. Again, trading about 120 on Tuesday, 180 on Wednesday, and 300 today against an OI of 900. So those were closing pretty much all week long. Worth noting the pars, the 2000s, also closing this week for about 500 contracts as well. So doesn't really line up. Well, today it lines up maybe for a vertical, about 300 to 350 of each, and a little bit on Tuesday, not so much on Wednesday. Does seem like there's been a lot of closing paper, which interestingly enough doesn't really seem to be reflected slightly in the skew. The calls have come in a little bit. The calls are 14.3% bid last week, 12.3% bid this week, but still demonstrably bid. The puts 8.1% cheap last week. This week 9.6% cheap. So that skew showing us we haven't exactly reached exhaustion yet. If you go out to April of next year, those calls are about 8.8% bid. They were 8.7% bid last week, so actually ticking up again this week. And the calls going all the way out to October of next year are still 4% bid. So just wild stuff. And again, who can blame them? This product has shown no signs of slowing down on the momentum front. In fact, looks like we've got the 2500s for April of next year trading pretty actively this week, 300 times. Again, that future is at 17.5 if you go out to April of next year. So that is a wee bit north, 750 handles north of where we're trading right now. Again, by April of next year, that's an eternity in these markets. Does look like paper might have been bailing on those a little bit, though, so perhaps they're deciding discretion, the better part of valor, to get the heck out of Dodge. Interesting stuff out here. And let's keep it for our metals roundup. Let's keep it in the other P. The other P-ium that is doing pretty well right now, and that is our old pal palladium. Again, the metal is just inescapable this week. Platinum number 4 to the light side. Palladium number 2, up nearly 9%. 18% is what it was up last week. So absolutely wild stuff. Palladium not quite the option stalwart that platinum is slowly becoming, but is getting there. About 2,800 contracts. Again, not earth-shaking, but this contract is coming from pretty much nothing in terms of volume. 16.5 is pretty close to where we're hanging out in that future right now. 1647.5, up 177 handles, or 12%, pretty much exactly, just since Monday. Just absolutely wild stuff. Obviously, in palladium, we go back to the end of our show last week. It's up about 9%. Just wild stuff. And of that, 90% of this flow is going up in December. So that's about as near dated as it gets. There's no 0-day flow yet in palladium, listeners. And let's see, vol-wise, what is the vol in palladium? Oh, it's a whopping 68.75. So clearly one of the juicier metals out there, listeners. Call wing actually coming back to earth a little bit. It was 18.1% bid last week, 14.5% bid this week. The puts are unched about 11% cheap last week, 11% cheap this week. I caution you when reading into any of these numbers. Still not the most liquid name, so some of that could be geared around the somewhat less than liquid prints we're seeing out there. Maybe that's why we're seeing a nearly 4-point decrease in the call wing, or it could just be some aggressive overriding because it is the 1500s that are leading the dance. A now in the money call leading the dance this week. Looks like paper was bailing on these about 330 times this week. Also worth noting the 1400s, 330, pretty much of those trading this week as well. So 100 each on Monday and 200 and change each on Wednesday. It looks like somebody bailed on the 1400, 1500 vertical. That vertical now is deep in the money. So hopefully they got their full value for it. You're going to do about as good as you can do on a 100 handle vertical on these right now. These are looking pretty good. So they got the heck out of Dodge on those. That's probably what's hitting the skew a little bit. Outside of that, not a heck of a lot going up unless you're really psyched about the 1900s trading about 200 times this week. About 100 of that on Tuesday. Looks like it's apropos of nothing else. It seems like it's just a straight up opening trade out there. So interesting stuff. Someone bailing on a now in the money vertical. They did well on those, I would think. So congrats to them. If past is prologue, folks usually buy those things in the metals. So they're probably laughing all the way to the bank. All right, listeners. That's going to do it for what was supposed to be a quick hit this week, turned into a deep sojourn into all things precious metals. Are you folks getting lured to the dark side of metals? Are you just saying this is absolutely insane? Might be good fodder for a question of the week coming up, which is just, what do you think of these levels in the metals? And what does that signal for the rest of the market and indeed the broad economy? Kind of hard to fit all that into a 4-response Twitter poll. But we'll see what we can do. We did talk about this a couple of weeks ago on our question of the week, and over half of you came down on the fact that gold right now is picking up what you're putting down from a sentiment perspective. You think gold is the more representative indicator for the fear gauge, your level of anxiety right now. That said, since we posted that, gold has obviously continued to rally, but so has VIX Cash. It's rallied 5 to 6 handles. It's up in the 22 range right now. It was about roughly 16 when we posted that poll, so up about 6 points in VIX Cash. And maybe that changes your outlook a little bit. Maybe VIX coming back to life changes that. But that said, gold and the precious metals have been screaming that something is afoot for quite some time, and clearly they are continuing to scream, and a lot of you are listening. Again, that's going to do it for us on TWIFO. Back again after the closing bell to break down all the action for the day in the world of options with the Hot Options Report. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk some vol. Should be a good time. Dr. Vic's other assorted special guests. We got some vol on our hands this week, so should be a bit of a banger. Coming back after that, of course, for the official after party of Vol Views, which is exclusively open to our pro members. It's called Options Oddities. It's a heck of a good time. And we talk about a lot of unusual activity. We talk about our own trades in there, all sorts of fun. Check it out, theoptionsinsider.com/pro. It's also a place to go to get access to the live streams and, of course, the database of the raw, uncut shows that we put up there instantly after the shows are done, so you don't have to wait for the podcast to hit. Then, of course, back again for Thor to wrap things up tomorrow. Then we're back again next week, all the way to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.